Good evening, everyone. I hope you all can hear me. I want to see one. Type comment one. Let me see if you all can hear me. Yeah, comment one in the chat box. Let me see if you all can hear me. Comment one, comment one, comment one. Let's get it started. Good, good. Like the live, share the live, like the live, share the live, like the live, share the live. Let's get it. Yeah, comment one. I want to just make sure that you all can hear me. All right. Good. Perfect. 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 Good. So today, basically, we're going to talk about a lot of things. We're going to talk about a lot of things today. We're going to talk about confirmations today, right? We're going to talk about confirmations. Some people like say, "Oh, good." Some people like, "Oh, I don't know when to enter, how to enter, price in my zone. What should I look for? Blah blah blah, and other stuff." Right? This is a question you all have been asking over and over again, and I will need you guys to just pay critical attention to it. Right? I will need you guys to pay critical attention to it. That is it. Good. So, yesterday we all talked about the point of interest that you're going to be looking for, or support and resistance levels and other stuff, right? That is it. So now, I'm not going to use this. I'm not going to just bother myself to just get myself entangled with this. So I'm going to use a different pair. Let's use let's say GBP AED. So we're going to be talking about confirmations. We're going to talk about confirmations, and confirmations are the things you want to see when price gets into your zone, right? Confirmations are the things you want to see when price gets into your zone. Let me just list them first before we get. Let me list them first before you get started. Good. I will need you guys to pay a critical attention to this topic. Good. So, first of all, you want to see first confirmation we're going to talk about. We are going to be using chart patterns as confirmations, right? I will need you guys to understand that whenever whoever that tells you that chart pattern doesn't work is practically lying to you. Is practically lying to you because you need to understand that the chart itself consists of what? Patterns, things that have been happening over and over again, right? The things that have been happening over and over again. All you need to do is just get yourself to understand these things, right? So we're just going to talk about a few of them, a few of those chart patterns, then you just apply it to our chart and let's see how best you're going to turn up to be, right? These are the patterns we have been using over and over again, right? But these are the few ones you're going to talk about. These are the few ones you're going to be talking about. So first confirmation chart pattern you're going to talk about is the M pattern or the double top pattern or the double top pattern, the double top pattern. Get your pens down, take notes. Get your pens down, take notes, share the live, like the live. Double top pattern, or you can call it an M pattern. Some will call it an M pattern. It's all the same. Two, you have the W pattern, which is the double bottom. With all these, there are rules that abide by it. There are things you want to see, right? That's what the fact you say, oh, M pattern, double top pattern, double bottom pattern, but there are things that you need to understand before you just go ahead to understand that, oh, I'm taking a buy based of the M pattern or a sell based of the W pattern, right? That is it. So, M pattern or W pattern, good. And we have, let me check one more. I'm going to talk about the head and shoulder pattern, head and shoulder, head and shoulder pattern. For the first one, we have the inverse head and shoulder pattern. inverse head and shoulder pattern. Good. So let's stick to this four for now. Let's stick to this four for now, right? There are a bunch of them. There are a bunch of them. There are specific ones that you have selected that we teach in the mentorship itself, right? But we are, because this one is free, is much more limited, right? We're going to talk about just these four. Then I think we apply it to it. You make some cool money for yourself. We are out of the trade. That is it. Good. So the M pattern is basically a reversal pattern. So that is when price give you a high. In this scenario, price will give you a high, give you a low, give you a high again. This high can be an equal high or can be a slight different high, slight higher than the previous high, then price drops to the downside. But the question is, where am I going to buy, right? Not because price is dropping, you get to be like, oh, price is trying to form an M pattern, so you're just going to enter for the trade. No, you don't assume. One thing you need to understand is we don't assume in the market. We don't assume. Whatever the market is doing, that is what you're following, right? So when price is traveling to the downside, one thing I would advise you do is just mark out this level to be your what? Your neckline. Mark out that level to be what? Your neckline. So with that neckline, we are having that neckline because you want to see price breaking that neckline to the downside in this scenario. So you're expecting price to break the neckline, then you sell to the downside. One thing you need to understand is that you don't sell immediately price break, right? You don't sell immediately price break the neckline. One thing you need to understand, candlestick closure matters a lot. Candlestick closure matters a lot. So you wait for price to break and close below the neckline. So if price is able to break and close below the neckline, that is why you take your sell position. You put your stop loss above your confirmation. You target, for now, I would advise you guys to target 1 to 2. It's much more profitable than you can ever imagine. It's much more profitable you can ever imagine. That is it. So 1 is to 2, then boom, you are out of the trade. Always put your stop loss above your confirmation. The reason why you are putting your stop loss above your confirmation is that when price go beyond that confirmation, that means that particular confirmation is invalid. It's no longer valid. Do you understand? That is why you put our stop loss above your confirmation. Good. So one thing, I've given you two key scenarios. Wait for price to break and close the neckline. If price is able to break and close the neckline, that is where you enter for your sell position. Put your stop loss above the neckline. Right? Good. Let's take it for example. You're waiting for price has broken the neckline, but you're waiting for price to close. But unfortunately, price closed very far, like this. Right? Price closed very far. The question is, are you going to enter for this particular sell here? See your stop loss wide here. This is going to make your stop loss very big. That is why our advice, that's our advice. If price break and closes very far, you wait for what? A retest on the neckline. These are key gist I'm giving you guys. You wait for a retest on the neckline, an extra confirmation, then you sell to the downside. So in this case scenario, we are turning this whole point that of which you would have used to be your stop loss to be your, how do you call it, profit margin. So in this case scenario, you have minimized your risk and increased your reward. That is it, right? You have minimized your risk and increased your reward. That is it. Good. So that is it about the M pattern. Let's talk about the W pattern. The same scenario, the same concept. The same scenario, the same concept. So in this case scenario, all that you're doing is what? Price give you a low, give you a high, give you equal low or a slight different low, right? A slight lower low, then give you another high, which is breaking the neckline. So whilst price is traveling to the upside, trying to break the neckline, all that you are doing is what? Marking out this particular level to be what? Your point of which you're expecting price to break, right? So if price is able to break above this neckline, that is where you enter for your buy. Not just a break and closure, a break and closure. So if price break and closes above this neckline, that is where you get to do what? Enter for your buy. You enter your target 1 is to 2, put the stop loss below your confirmation, right? The same scenario. Price is able if price is able to just, how do you call it, break but closes very far, all that you need to understand, all that you need to understand is that you are waiting for what? A retest, because you want to capitalize on it, right? So now price has broken and closed very far. A retest happens. You wait for a retest to happen, then enter for your buy position. That is it. Based on what another extra confirmation you're going to get that in that particular zone, on that particular neckline. That is it. On that particular neckline. Just like that. You minimize your risk, you increase your reward. That is what you'll be doing over and over again. Over and over again. That is it. Good. Let's head into the chat and try and get some couple of examples on that. All right. Let's try and get a couple of examples. Let's try and get a couple of examples. Good. So this is a typical example of what? An M pattern, right? Slight different, an M pattern. In this case scenario, we're expecting price to just break the neckline, then you enter for ourselves. So price broke the neckline, you can put your stop loss above your confirmation. Let's do a scenario here like this. That is it, right? Price broke the neckline here. So this is where price closed here. This is where price closed. So you enter right here, right? Then you put your stop loss above your confirmation. You target 1:2, right? You target 1:2. That is it. One thing you need to understand, one thing you need to understand is that always wait for price to close. Always wait for price to close. If price, because in some scenarios, price will do something like this, an M like this, will come in here. You will think price has broken the neckline, right? You will think that price has broken the neckline, so you are jumping for that particular sell, but price hasn't closed. You will jump in, and price will just come in here again, take you out. You will be left in the wick. That is where some people will be like, "Oh, you have become those people are going to say you have become liquidity, you have become liquidity." It's nothing. One thing you need to understand is trading is a matter of patience. It takes from the impatience and gives you the patience. That is it. That is it. Good. So you being able to wait for price to break and close is all that matters. If price hasn't closed and you jump into this particular sell, what if price comes back into it, goes to the upside? What are you going to do to yourself? All that you need to understand is that your ability to be patient enough to wait for price to close is all that matters. It's all that matters for now. That is it. Immediate price close, just like the scenario you have here. Immediate price close, then you jump in for that particular sell. That is it. Let's get another example. Let's get a couple of examples. Let's get a couple of examples. You need to understand that price always respect whatever you're doing. Price always respect it, right? You see, this is an M pattern. M pattern. You mark up the neckline. This is your neckline, right? So you need price break and close below the neckline. Boom. Jump in for the, you're not waiting for anything again. You are not waiting for anything again. Immediate price close below the neckline. You are not waiting for anything again, my dear friends. Don't hesitate. One thing you need to understand is that drawdowns are bound to happen. Some people like, so immediately I enter for the buy or immediately I enter for the sell price. I start seeing negative, right? You start seeing negative. Then don't be bothered about the negative. One thing you need to understand is that retracement is bound to happen. Whoever that is posting, whoever that you have seen posting a profit of $10,000, $50,000, $5,000, whatever profit margin the person is posting, always remember that that trade started from a negative. Always remember that trade started from negative. That person's trade started from -1,000, -2,000, -3,000, but the person was patient enough not to close that particular, how do you call it, trade, because he understood the reason behind the trade. He understood that, oh, this is the reason I'm entering for this sell. Fine. This is the reason I'm entering for this sell. I'm putting my stop loss above my confirmation. The reason I'm putting my stop loss there is that if price go beyond that particular level, my setup is invalid. It's all good, right? But so far as price is within whatever price is doing, I'm still holding that trade. I'm still holding that trade. That is it. So it hits my full take profit or take profit one or take profit two or whatever. That is it. All you need patience. All you need is patience. All you need is patience. That is it. Let's try and get a couple of examples. Good. We have one more here. You see, price gave this W pattern here. Price gave a W pattern here. Hello. So price came down here. Price broke the neckline. I'm telling you guys, immediately price break and close, no need for you to just, how do you call it, to hesitate. So price broke and closed above the neckline, you just enter for your buy position. This is a correct gist I'm giving you guys. You guys are very, very lucky. You guys are very, very lucky. The target 1:2 raised to 1 ratio. That is it. That is it. You don't need anything. You don't need anything complicated. Don't. You see, if your setup is very difficult to identify, be very careful with that. When you go to the chart, you're going to see a bunch of W pattern, a bunch of M pattern, a bunch of these are patterns that have been repeating themselves over and over again. That is why it's called confirmations. That is it. If let's put in this scenario, if you have the ability to sleep, have a dream, and that dream have been happening. Let's say today you had a dream about something, you wake up that particular time, the dream, what you saw in the dream happened again, fine. Then the following day you saw another thing in the dream, it happened again. The following day, that is it. So you see that those are the patterns that have been repeating itself over and over again. I've been seeing this consistently and has been repeating itself consistently. So the next time I'm seeing it, this is what is about to happen. That is it. That is it. Let's just get more. Let's get a couple of examples on the W pattern. You have seen a W pattern, you have seen an M pattern. Let's just get it. That is all. Right? That is all that you need. Now, let's get to the next, how do you call it? Confirmation. The next two confirmations. Sorry. Good. The next two confirmation. Yeah. With regards to the time frames, right? With regards to the time frames, let me give you guys this gist. With regards to the time frame, let me give you you guys this gist. With time frames, most of the times our advice, if you're trading a more volatile pair, you can pair like gold, BTC, USD, or other stuff. You can use 15 minutes time frame, 5 minutes time frame for your confirmations. If you're trading currencies, you can use the 15 minutes time frame, or 1 hour or 4 hour for your confirmation. That is it. 15 minutes, 1 hour, 4 hour. Any of them is okay. Do you understand? That is it. Let's get to the next two confirmations, which is the M pattern, sorry, the head and shoulder pattern and inverse head and shoulder pattern. So with regards to the head and shoulder pattern, it's a reversal pattern, right? One, that is when price give you a high, give you a low, give you a higher high, give you an equal low, then give you another shoulder, then start dropping to the downside. That is it. So one thing you need to understand, with regards to this same thing, you are going to be marking out what? Your neckline like this. So whilst price is traveling here, you are waiting patiently for price to break and close here, right? To break and close below the neckline. So immediately price break and close below the neckline, that is why you pick up your sell to sell, stop loss above the shoulder. You target 1:2 raised to 1 ratio. You are done. That is practically what you'll be doing over and over again. That is what you'll be doing over and over again. You just need to wait patiently. Just wait. Just wait. Right? That's the whole draw. Don't force it. Just wait for price to break and close below the neckline, then you sell to the downside. Boom. That is it. And one thing about head and shoulder pattern is that it gives a lot of entry, but most of my students know about this how do you call it, entry model. So when price come into this particular um, shoulder again, there's an entry in here. I think that one is exclusive. but this free mentorship is quite limited, right? It's quite limited. So this particular point, there's an entry point here of which you can take advantage of, right? But not just because price gets in here, you just tap, you just sell. No, right? All based of confirmations. But the confirmations, those criteria comes with different time sections, right? So with that one, my students, most of my students have it, right? That is it. That is the head and shoulder pattern. Let's talk about the inverse head and shoulder pattern. With regards to the inverse head and shoulder pattern, the same scenario, low, good. Will it always break the neckline? Good. That's a very good question. Will it always break the neckline? No. No, it will not all the time is going to break the neckline. That is why you need to be patient. You need to be patient enough to wait for price to see if price is going to break. That is it. Because if you are not able to wait for price to break, that one you are going to do yourself a very big harm. Because price can just come in here. So you have marked your neckline like this. You're expecting price. You're expecting price to break. Let me just use something different. Sorry. You're expecting price to break the neckline, then you break and close, then you buy to the upside. But when price gets in here, you are expecting a break, but that doesn't mean that price must break. You don't control the market, right? What the market is doing, you are following it. You are following what the market is doing. You are not going to tell the market to do what you want. No. You want the market to break this neckline, then you buy. Fine, that is what you want. But the market is also saying here, I don't want to break this neckline. Market can come in here, bounce to the downside. But your ability to be patient enough to wait for price to break, now you have seen that price didn't break, so that particular loss has been avoided. That is it. This is what patience brings about. You being able to be patient enough to wait for your right setup. If that right setup hasn't formed yet or isn't forming, you don't take any trade. That is how you avoid losses. Just because you have the M pattern, you have the confirmation I've talked about, doesn't mean that price must break the neckline. No. Do you understand? If price must do what we want, price will do what we want to do, we want from the market, we wouldn't have been like let me put in this scenario, we wouldn't have been putting stop losses because I'm buying, so price must buy. But it doesn't work that way, right? It doesn't work that way. It's a matter of patience. You've been able to wait for price to break the neckline and close. You see, all the time I'm talking about these confirmations, I talk about break and close, right? I'm talking about break and close. If price break this neckline, don't jump into it. Wait for price to close. If price is able to close above this neckline, that is why you jump in for your buy. That is it. Because price can come in here, try to break, it will break itself and later come into the particular region, right? Which is going to cause a lot of losses. But what is going to make you avoid this loss is because you have the knowledge that you are supposed to wait for price to break and close above the neckline. That is it. But if price didn't break and close above the neckline, so you're not taking any trade. Simple. Simple. That is how it is. And one thing I also want to talk about is your ability to wait for price to break and close is that let's put in this scenario. Hold on. Good. Maybe you are waiting for price to break and close, and price is also buying to the upside. It's buying, it's buying, it's buying. But you don't want to miss that particular buy. No need to force it. Let price do whatever it has to do. Right? If you close very far, you wait for a retest on the neckline. Then you get your extra confirmation, then you buy to the upside. Your retest on the neckline, when you get an extra confirmation, then you buy to the upside. Simple. Don't force it. Don't change the market. Don't change price. Whatever you do, price is going to present opportunity. You have to be able to spot out those opportunities, then take advantage of them. That is your duty. That is your duty. If I'm supposed to look for ABC, if I go to the market, I'm supposed to look for ABC. I'm not seeing that ABC. Let's say I'm supposed to look for double top, double bottom on my zones, on my support and resistance levels, and I'm not seeing them. There's no need for me to buy or sell. Not just because someone is posting 20% profit, 100% profit, so I must also get an entry. No, we are all trained different strategies. Now let me face your psychology. We are all trained different psychology. How do you call it? Strategies. I'm looking for ABC. Someone else is looking for XYZ. The person who is looking for his XYZ has seen his XYZ. That is why he's taking the trade. But I'm looking for my ABC. I haven't seen my ABC. So why should I take the trade? Just because XYZ have taken a trade, I also have to take the trade. No, that is it. That is it. And you don't have to entangle yourself in, let's say, there's no best time, how do you call it, section, trading section, that you'll be like, oh, my strategy work only in New York session, my strategy work only in London. It works all the time. This confirmations, you apply it to your point of interest, you are done. It works all the time. Let's try and get a couple of head and shoulder pattern. Let's try and get a couple of head and shoulder pattern and see GBP, GBP. It doesn't really matter if you're trading the New York section, London section, and other stuff, right? That is it. But one thing you need to understand is that the volumes that happens in London section and the volume that happens in the volatility that occur in London and New York section can never be